torch and then be able to deliver the message within a 2-hour period. And right now, we're going to have fun being able to do this and study the markets and look at the market different from how you've been able to look at the market. I trade market geometry, okay? And that is the element of using shapes, using numbers, and using different angles to be able to reveal where price will be in it. And how I came across this is that I serve a God that uses shapes, that uses numbers, and he uses parables to either reveal information or conceal information. So I knew that going through that route, I need to adopt the same approach that things in the Forex market, even though people say it's unpredictable, I'm going to beg to differ and say nothing happens by chance. Just like you being born and you being here, nothing happens by chance. And so I took that philosophy, and we all know that wherever there is good, there is evil. And we know that the banks have been running the system, and they've been running the system the way they want to run the system. And so you got to understand that for every good that God has put on this earth, the devil, okay, or the Antichrist, or the opponent, or the enemy has caused a counterfeit to emerge. Okay, so for every 7, which is a number of redemption of perfection, there's going to be a 666 attributed to it. Okay, for every 10, which is a whole number, all right, or 12, which is a number of government, there's going to be a 13, which is a level of the Masonic hierarchy. So there's going to be different things that are happening in the market that's going to cause you to realize that numbers and shapes are going to be able to dictate to you where price can go. Can I get a 111 if you feel where I'm going with this right now? All right. It's getting hot in here. So what we're going to do right now is that at random, just put any currency pair that you want to be dissected. And we are going to do a full in-depth breakdown using the various styles I've used in geometry, and we're going to break it down completely. So just keep dropping them. There's going to be hundreds that will be dropped, and at random, I'm going to pick a pair. And whatever I do with this pair can be applied to other pairs. Now, if you're in my trade of EuroCAD, we know that we're in profit, so it's okay. GJ, it kind of missed our entry, but that's okay. But how many of you, before we go into that, have liked what you've seen from swipe trades from me in particular? I'm going to be selfish a little bit, but from me in particular. We've gone from, me trying to find my footings in a team, making a few mistakes in the beginning. Everyone's like, who's this Papa Smurf guy? But I remember in my bio, I said, wherever there is red, there will be blue. All right. And so a few weeks ago, we had 260 pips from me. Last 2 weeks, we had 300 and something from me. Last week, we had about 410 from me. And so already I have netted just by myself 1,100 pips in the month of May. All right. So I hope that you guys have been beneficiaries of that. All righty. So going back to it, keep the currency pairs coming, and whatever I feel that we should go to, we'll do a massive case study on it. Alrighty? And let your friends and let your family know that if they haven't come on this call, it's their right. Because what I'm going to show you guys is going to blow your mind. I'm going to go with GBP NZ because they call me Mr. GBP. And the reason why we're going to do GBP NZ is because I like GBP NZ. All right? So let me load that up. I'm going to take off all my previous on there. I think I dissected. Okay, no, I removed it. So you can see that I have a whole bunch of shapes and a whole bunch of numbers, all that stuff, and I just muck around. I see all the parts. But the one thing I want to be able to break down to you is that even in the Bible, in life, wherever you go, whatever happens once will surely happen again. Okay? This is the first rule of thumb I want you guys to be able to note in your notebook. Whatever happens once will surely happen. Whether it be good, whether it be bad. If you do good unto someone, someone will do good unto you. All right? Good karma, bad karma, and the same thing applies in the Forex market. And this is how I'm going to dissect this just by looking at a plain chart. Now, we're going to break down this chart based on knowing some basic terms like impulse and correction. If you have not heard these terms before, type in an N or a no in the chat box so we can quickly break that down, because this will be our foundation to be able to do great and mighty things. All right? So if you have not heard of the term impulse and correction, drop an N and I'll quickly go over it. and I'll do my best to explain it in a way where everybody. All right, we can. Yeah, I'll explain it in a way where everyone can understand. Market moves in two ways. All right, so whenever you think of the market, think of it in these two things. There's the impulse and there's the correction. These are the only two things you need to worry about in the Forex market. So whenever you're looking at a chart, you're going to ask yourself, are we in an impulse move right now, or are we in a corrective move? Okay, so we're going to note these right here. Impulse move simply means that price, okay, is going in a direction, in one direction, without it reversing. What is a good example of an impulse move? Of an impulse move, I'll get my trend line tool and I'll draw it from this swing low to this swing high. I'll change the color so everyone can clearly see it. And if you want to take a screenshot, you can. You can see that this move that has taken place has gone in one continuous direction without any reversal. A reversal simply means going back to where it came from. So type in a Y or a yes if you can see that this is a clear impulse move. Okay? It just has gone straight up, no reverse. Now, obviously, a correction or a pullback is price going back to where it came from in its direction. But the ending of the corrective move does not exceed the impulse move. You notice how it didn't come all the way back down, but it came to a point and then kept on going. Now, it's very important to know this. If the corrective move finishes above where the impulse move started, then you're continuing in the uptrend. All right? If the impulse move is below, the corrective move finishes above where the impulse move started, it is an uptrend. Now, if it's the other way around, okay, just say, for example, this corrective move then broke this area, which was the previous impulse move, it is now a trend change. It has changed the direction of where it's going. All right. These are just some small things that will help you see the big picture. Just remember that I said in the beginning, whatever happens once will surely happen again. Now, when we say an impulse move, know that there's going to be an impulse move that takes place after a corrective move. You don't know when it will happen, you don't know how it will happen, how it will get there, but it will get there. And so what I want to do first is I want to concentrate on this impulse move because this was the first impulse move that took place on GBP NZ that we can see for a time. We can dissect this area later, but I want you to type in a Y or a yes if you can see that this is a clear impulse move. Even though there's a bit of mess that happened in this section over here, let me zoom in so you can see it. The trend was still up. It was still going up and up and up. All right, and then you saw that price corrected. It reversed back towards where the impulse move started. Now, the funny thing about how God has fashioned life is that things happen in cycles. And so when I say whatever happens once will happen again, I'm just going to get the same length of this impulse move. Remember, this is a chart that we all opened together. I haven't done any preconceived juju. I haven't, manipulated this chart. We're going to break this down the best way we can. And so what you can see is that if I move my impulse move projection to the upside, you can see that price has gone towards the 197 area. Now, obviously, you can see here that, hey, something's off here. My projection at the end of this projection should read 197, but price has stopped at 196. Okay? Now, if we keep zooming across, you can see that if you put your horizontal line tool at the top of where this impulse move took place, you can see that by the wick, okay, price hit that point that we drew all the way over here, and we just bought and held, and we just waited for price to get to this area over here. Remember what I said, whatever happens once will surely happen again. And you can see already that if you put this together, this is how the market breaks it down with impulses and corrections. All right, just be aware and note that the market only moves in those two ways. Now, to understand where you are in the market, you need to understand this and ask yourself this question: am I in an uptrend or a downtrend? Because determining that will help you identify where you're going to be in the market. Now, this was a clear uptrend. Why? Because we can see areas in the chart where you can connect bottoms on bottoms on bottoms, and you can see that whenever we connect these three together, you can see that there's a clear uptrend that happened in the market. So the only thing you want to concentrate on is buying. You don't want to sell in an uptrend because you don't know when that corrective move is going to end. All right? So once you understand that, then you'll be able to identify how you're going to be able to tackle this. But so far, type in a Y or a yes if you can see that whatever happens once will surely happen again with just this example. Now, while that is happening, I'm going to do another example over here. You can see that price has shot up over here. You see that the impulse move was made. You see that the corrective move has come down. It did not exceed where the impulse move started, so we're still in a buying environment. And if you copy the length of this impulse move and you put it at the end, okay, you can see that it's fairly close to where our market is going to be. Now, here's the thing. Forex is such an ego-driven vehicle that you don't want to be in the area of, I just wanted to hit my take profit. So my tip and trick is that whenever I see an impulse move like so, you can see that that's really close. Hold on. Let's zoom in and see the end of this move. All right. Whenever you have a projection, you don't want to always wait for the projection to try and be hit. What you want to do is you want to put your take profit at least 15 to 20 pips below, because we all know that the brokers work against us to make sure that we don't get these pips. So instead of putting it up at this level, you can see that it barely touched and then reversed. What you can do is, hey, I can see that could possibly go to 198, but let me take profit 30 pips below. And that will be able to help you ensure that you secure the bag. That is a very simple way. Without, you see, we don't have any indicators. We don't have any fancy stuff on our charts. We're just using what our eye can see, identifying what the impulse move is, waiting for a corrective move, and then going towards the impulse move again. Now, the question you're going to ask is, how do I know when the corrective move is going to end? The corrective move is going to give you 3 tips, 3 signs that is about to end. It's going to change direction. All right? The first sign is that in a corrective move, in an uptrend, there is going to be a low that is established. Okay? So you can see that it's always been up, 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 up. And you can see as it's come down, there has been a low that was established before a semi-reversal. Okay? So you want to take note of that area. The second thing you want to do is that you want to identify, let me change that color. The second thing you want to do is you want to wait for that low area to be broken. Doesn't matter by how much, doesn't matter if it's 50 pips, 20 pips, 10 pips. You can clearly see that there's bodies that are there where there was no bodies before. There was just wicks. And so you want to identify that this is a lower low. This is a place in the market where people think it's selling. But we've already identified that we are in an uptrend. Now, the final thing you want to do is you want to wait for a dip that looks like this, a dip that looks like this, but the dip has to be higher than the place that it broke. So you can see with this area over here, you can clearly see that after price broke previous structure, it came up and it came down to form a confirmation dip. You can see that this dip was higher than this area over here. Once you get those 3 things, you have a 90% probability that the markets are going to go the way that you anticipate. This move is a move I call the Smurf and swerve. Okay? Why? Because it's swerving people to think it's going one way, and smurfing because we know it's going the way we want it to go, so we stay blue. So again, I'm going to go over those 3 tips. Okay? This is in an uptrend. In a corrective move entry, you want to wait for the first low. Step number 2 is you want to wait for first low to be broken. It has to break. If there's no breakage, then forget number 3 because you'll confuse yourself. And number 3, you want to wait for confirmation dip that is higher than the broken low. All right. So I'm going to put that on the screen for you to copy, and I'm going to reiterate everything again. You see that there's a corrective move that's taken place. You've seen that there was a low that was established before there was a mini reversal going to the upside. This is the first move that's going to make people think, okay, we are buying now. And guess what happens? You get excited, price has gone up maybe 100 pips, maybe 50 pips. You don't put your stop loss down, and then all of a sudden you see that it crashes down and it breaks the previous low. And why that is such is because most people, because they've seen that there's a wick in this area, okay, I'm showing you market psychology now. You've seen that there's this wick in this area. 90% of people will put their stop loss right below that wick, because we've been told with support and resistance, you put your stop loss below the lowest wick. And so what they've done is they've made you believe that price has gone up. And this is going to answer the question as to why sometimes, you know, you've traded and then price is going a certain way and then it just crashes against you and you don't know what happened. You're looking for news and all these other justifications, and you're pulling your hair out and you're wondering what is going on. So you can see that you've put your stop loss right below this wick. It's come up and it's crashed right down. It's taken out your stop and now it's gone back up. So that's why we don't act on this, but this is the sign, okay? God says whenever he's going to do something new with you, he's going to send you a sign, okay? And that sign for us with this reversal pattern is this first low. Comes up, it breaks that first low, it causes a new low. Now people are thinking, oh, this is a downtrend, so they're going to continue holding sells. And then before you know it, it goes up and it causes a dip, and that is where you're going to enter the market. Where would your stop loss be? Yes, in this situation, you can put it below where your lowest low will be. Why would you put it there? Because there's a very low probability that after the low has been broken, it won't be broken again if it's in an uptrend. Alrighty? Then you can ride your trade all the way to the top. Now, remember when I said what happens once can surely happen again? If you do not have the patience to be a swing trader, this is what you can do, all right? Measure the distance between the bottom of the broken low to where it ended. Then you can move that measurement and say, okay, this is the distance of my take profit one, okay? So you're gonna put that here. I can remove the green box because you guys can see it visually now. This is the distance of my take profit one. Alrighty? So you can put a line there to say, hey, this is what I'm going to do. Whatever happens once will surely happen again. You can clearly see by highlight, I'm going to make this a different color, so red on red. All right, so you can see that price came up and it wicked and it came back down to form a new low. So what you can do is that after the low has been created, you can then move this area which you've drawn in the past, and then you can make that your second take profit. Okay? Make that your second take profit, and obviously you can see that it's hit. So now you're catching all the mini moves within the mini moves. You see, what I've said before is whatever happens once will surely happen again. So that in itself, if you've caught it from this area here, 189, and you've gone all the way up to 193, guess what? That is 400 pips. And that is how I've been able to catch these pips on a regular basis for us to be able to eat. Okay? Nothing complicated about it. It's just a matter of finding this first low after a corrective structure. And now you can clearly see that if you move your rectangle tool across, you can clearly see what's happened here. It's gone up. You can see that the low has been broken. It's come back down and it's wicked this area that was broken and has gone all the way up. That is how you use geometry. Okay? You can also then say, hey, I'm not sure when this move will end. I can see that it's an uptrend, but then, you know, Papa Smurf told me that whatever happens once will happen again. So let me wait and see if I can try and catch this move. So you can use this impulse length, put it at the beginning or at the end of the corrective structure, and if you scroll up, boom. You can clearly see that once price got to this area, it was very hard for it to penetrate past that area without it coming back down and then retesting to then go the other way. Type in a Y or a yes if this makes sense to you. And then put in a 333 if you want me to repeat that. Any stage, or if you want me to go through the strategy again. Let me check the chat box. I have a lot of Ys, a few 333s. Okay. Great. Mind blowing. I like that. Okay. See, if I was in church, I'd ask you to drop an offering, but I remember where I am. All right, so let's go through that again. Let's delete everything. And let's go to a different piece of structure. Okay, we're on the same chart. We don't need to go anywhere. Remember what I said, that when you're looking for an impulse in the corrective structure, you need to recognize when the impulse move starts and when it ends. Okay, all right? So we're gonna wait, we're gonna wait for a corrective structure. We've seen that there's this move that's happened over here that's formed somewhat of a double top. Okay, this is part of the move. All right, now what you want to wait for is finding a low. So you came and you saw that there was a low here. You don't want to act yet because you don't know how low it's going to go. You don't know if this is going to fly up, but you're going to wait for one thing, and that is finding the lower low. Now that we've illustrated it like that, you can see that when it's come down to this area, it's shot back up, but guess what it did? If we zoom in, you can see that two little bodies have broken down past this structure to make people think that, oh, it's a downtrend now. Now, if you had gotten on this area and they told you by support and resistance that you put your stop loss below the lowest wick, it would have come down, stopped you out, bounced off, laughed at you, and then have gone up. Okay? So you've seen that step one, low was established. You've seen that the low was then broken, and then you see that there was a confirmation dip right at the top. Remember, the confirmation dip has to be above where the broken low was. Alrighty? That's how you know you're ready to go. Alright? And then, what did we say in the beginning? Whatever happens once will surely happen again. Measuring it from where the confirmation dip took place, if we go up and put it at the end of the impulse move, you can see that when price hit that area, it kind of reversed before going back up again. Alrighty? So this is a pattern that I've noticed in the market that has taken place a lot, and this is what I call it. Why? Smurfing, because the intent is for us to stay blue. Now, in this situation, whenever you see this, you're going against popular belief because everyone will tell you it's a sell, but you're saying no, it's a buy. Why? Because you've understood that we're now commencing our uptrend. You know, the only place you can look is up. Meanwhile, they're thinking, oh, it's a double top, I'm going to go down. And so they're going to be holding it. All right? So next thing you want to be able to understand that is it's a swerving pattern. You've been able to identify your low. Support and resistance will teach you that you need to put your stop loss below the wick, the lowest wick on the support or a resistance, and they will say that price won't come down to it. It's come up. It's fooled you by thinking it's come up. You're getting nostalgic. You're thinking about what you want to buy for Bay. You're thinking about your next holiday. You're thinking about, giving that resignation letter to your boss, and then it's come down, and then you hate your life. All right? Why? Because it swerved you in thinking that this was going to go up much sooner. After it came down and it came back up to form a confirmation dip, like I said, you can put your stop loss below the wick of the broken low. And remember, 90% probability that price won't come down after you enter that trade. And you can see if you entered here, only one time did it come to test that structure before going to the upside. It was all the way up. Alrighty? Now that's just one aspect of, sorry. So would you hold out on the one even though it dropped in risk? No, so you don't enter on the broken low. You don't enter on step 1 or 2. You want to enter on step 3. You want to make sure that you've done your homework. You want to be able to identify that, hey, look, there's a low after a corrective structure. You want to wait for the low to be broken, and then you're looking for, hey, there has to be a dip somewhere in the market. All right. Once you find that dip, it might be a small dip, it might be a sharp dip, but you can identify what a dip looks like. Once you find that, anywhere along this area, is where you can enter your buy, because your stop loss is all the way down here. Using risk management and riding it all the way up, as soon as it goes up 30 pips, then, you know, it's risk free. You can ride it as long as you want to ride it. But you need to identify that pattern first. So now we've added a bit of color and texture towards the impulse and reversal by giving it characteristics for you to know that, hey, the corrective move is about to end. We need to get ready. Okay? We need to start writing those letters to our bosses and say we quit. You know what I mean? Those are the aspects that you want to enter into. You don't want to enter off the first bounce, because you don't know if that bounce is going to continue going down or it's going to swerve you and take you out. And there's no worse feeling than that. Alrighty, so that's just one aspect of this geometry, but it's a very powerful aspect of geometry. If you're able to identify where the reversal pattern starts and stops, you'll be really, really chill, you know. And here's another thing: if the first impulse move is sharp and the corrective move is fluid, then the second move that's going to the upside will be very choppy. So what you want to do is you want to find a move like this. You see how it's going up, but it's taking forever to go up. Taking forever to go up. Okay? And so what you want to do is, once you find a move that takes forever to go up, then you want to add that length to the next move, because chances are that second move will go up much faster than the first move. All right? See this move over here, if we get our forecasting tool, maybe our bar count. Okay, we'll get this tool. Going from here to here, it's 100 bars. It took about 22 days. Okay, so it took 3 weeks to get from there to there. Now, let's measure it with this second move. Going from the bottom here all the way to the top, 62 bars, 14 days, the same amount of pips. All right, so that's another trick. You can say that, hey, I've seen an impulse move that is very choppy, which means the second impulse move to come after will be a very strong one. All right, so type in a 111 if that makes sense. Applies to any time frame. I use the 4-hour time frame simply because I have a life. I like to sleep sometimes. I like to hang out with my partner. We go movies every now and then. So a 4-hour time frame will allow me enough time to be able to enter my trade and not stress. So here's the thing with time frames that you need to take note of, is that whatever time frame that you enter your trade on, know it will take 3 times the amount for you to see some form of a reaction. So if you're in the H4, you're going to have to wait at least 12 hours to see some form of a reaction. If you're on a daily, 3 days. Weekly, 3 weeks. H1, you're going to wait 3 hours. 15 minutes, you're going to wait 45 minutes. So that's something that you need to consider if you want to trade. Those who are parents, those in schooling, I'd much recommend or encourage you to look at swing trading, getting high pips so you can be able to concentrate, you can sleep at night, you can hang out and not be distracted, knowing that, hey, I forecasted this to go up about, how long was this? This went from 184 to, so that's about 900 pips. Imagine saying, hey, I'm going to leave this for 14 days, anticipating 900 pips. It went up pretty quickly. All right, so that's something that you want to consider. So I'm going to give you 30 seconds to compile your notes. In this time, I'm going to take maybe 2 or 3 questions in regards to what I just taught here. And then I'm going to teach you something about Fibonacci that's going to really blow your mind. So if you don't have a calculator, right now I'm going to encourage you to get a calculator so we can go through this next session.
Real quick, man, definitely just want to say I appreciate you once again. You're killing it. I see the team is going crazy. The chat is going crazy. But nonetheless, I appreciate you, man. You're dropping nothing but gems tonight.
Oh, I appreciate that. I appreciate that. Happy to do it anytime for you guys. You guys are family. So yeah, I'm just going to answer this question one time. So I'll write it down. Whatever time frame that you enter in, wait at least 3 times the amount before expecting a reaction. Okay, so what do you do? You get your time frame and times it by 3. Okay, so you're in the H4, times 4 hours by 3, that is 12 hours. You're in a daily, so it's, daily or 24 hours, you're going to times that by 3, that is 72 hours or 3 days. So whatever the time frame is, wait at least 3 times the amount before you see some form of reaction. Why? Chances are you're going to get in on a doji or an indecision candle or a consolidation period. Okay? So, just say, for argument's sake, you entered at this top here where there was a spinning top. You would have been lucky. You would have got the reaction you wanted straight away. But just say, you forecasted it to go down at this area, and you're on the 4-hour chart, 1, 2, 3. You're pretty much at break even before you see some form of reaction. And this is where risk management comes into play. If you have your risk management on point, then you won't have to worry because it's not going to really affect your account. So that is that on, this is what I call the geometry basics. And just keep this in mind because we're going to use the same chart to be able to dissect everything, and then you will be able to work it out on your own chart and see how you go with being able to identify these small techniques that I use on swipe trades. All right, so I'm going to give you just a moment to maybe screenshot or take these notes down, and then I'm going to get you onto some Fibonacci, which will be really, really, really cool, especially for those who love Fibonacci. I'm going to show you that Fibonacci is more of a trend trading tool than it is a trend reversal tool. So you're going to love it. So I'm going to give you 30 more seconds, and I'm going to wipe everything away, and then we start from scratch. Let me check on my AUD USD trade. It's still risk-free. We're still up about 100 pips, which is great. Let's see EuroCAD. EuroCAD is floating about 20 pips in profit, which is great. And GJ, it's still floating in that area. Normally London session, it normally spikes out in the beginning. So I'm going to hold that pending there. If it doesn't hit our entry, then I'll just cancel the trade. But we are risk-free and we're clearing the market. So thank you guys for all of your support. Let's get into the next. How long do you wait until your first low? The first low is established. Okay, so when you say the first low, the low is established when price starts to reverse and gives you the impression that it's continuing its trend. Okay, so you see the corrective move, it's come down, it's reversed back up again, going back in its original direction. Then the second move goes down, but it makes sure that it breaks the first low. Now, those who are harmonic traders, you can see with your naked eye, if you put all this together, what do we have over here? Boom. So there's a science behind everything that we're teaching. All right. So it's not about how long you wait. It's about seeing what's in the market, because asking how long will push a measure of impatience in you that, oh, I have to wait, 24 hours before this. No, see what the market is communicating to you and then work based on what the market is giving you. All right. One more question, and then I have to move on to this next thing because I don't want to take up your time. I know a lot of you are bored of me, right? And even swipe masters need reassurance, all right? All right, so let's go on to Fibonacci. Fibonacci is something, it's either you get it or you don't. Or people just look at it because it's way too intimidating. Now, my issue when I first studied Fibonacci, I still consider myself to be a new trader. I haven't been trading longer than 2 years, all right? So I'm still learning like you guys are learning. But when I was in my situation, it was like now or never. All these negative words in your head saying you can't make it, you'll never amount to anything. Your back's against the wall when you're sleeping in parks or on floors and studying the craft. So you have to learn quick. But one issue I had with Fibonacci when I was first learning it was that it was more of a guessing game than anything. So, you hear people say, oh, where is the true reversal? Is it the 382 or is it the 618? And then if it reverses at 618, where do I take my profit? So it becomes one of those things where I'm guessing it here. If it hits 618, then I'll do this, then I'll do that. And what that promotes, it promotes uneasiness. You'll become too eager to enter the market when you shouldn't, without waiting for those small confirmations we went through in that first part. All right. So what I'm going to stress to you is that if you see it like the way I see it, you're going to be loving trends way more than anticipating reversals. I find that people lose trades because they anticipate the reversal rather than riding the trend. Okay, so we've been able to already identify our impulse moves and our corrective moves. Now, if we add our Fibonacci into it, it will make a lot more sense as to why I say it's a trend continuation tool, not a trend reversal tool. Now, what we're going to do here is, this is my custom Fibonacci thing. So we're not going to use that. We're going to go back to our default settings. Just give me a minute. I'm going to get rid of this. And we're going to talk about the original retracements, okay? Then I'm going to get you guys and gals to write down a formula that goes with those retracements. Now, 88.6 is one that no one talks about, poor guy, but he's part of the retracements when it comes to Fibonacci. All right, so we're looking at this. Oops, where did the price go? All right, so use percentages. All right, so you can see that price can range between 0 and 100, okay? And then we have a thing called extensions where there's, 127 and blah, blah, blah. But I want to give you a mathematical justification as to why these numbers exist, and then we can get into it. Now, there's only one pairing that's an exception to the rule, but they both work together hand in hand. And so these are the retracement levels. These are what they call the minor levels or the hidden levels of support and resistance. You obviously have your 0 and your 100. Then you have your 11.4, 23.6, 38.2, 50, 61.8, 78.6, or 76.4, 88.6, and 100. Now, first, before getting into extensions, you have to understand that numbers, especially these numbers, are related to each other. Okay? And it might seem simple, and it might be like, duh, Papa Smurf, like we know this. But I just want to break it down so it's like, okay, now I get what this will be. And trust me, once you get this aspect, then you're going to know why we do what we do when it comes to using this tool. Now, every number has to be taken away from 100, okay? Because 100 is a whole number. It's 100%. It equals 1, okay? Now, for those who have their calculator, I hope you have your calculator out. Can you please type in 100, take away 88.6, and put it into the chat box. $100, take away 11.4. What do you know? Okay, whoever put 21.4, that's okay. We get there. All right. Okay, someone just had a light bulb moment like, okay, I know where he's going with this. What is 100 take away 61.8? $100 take away 61.8. 38.2. There you go. Amazing stuff. Now, remember when I said that 78.6 was the exception to the rule? I'm more of a 76.4 person, or a 21, 21.4, 22.4. That's fine. These two numbers would be interrelatable, but we're going to say for argument's sake that they equal 100. All right. You don't have to, but just for argument's sake, we're building a foundation on this. Now, when you know these numbers are related, instead of seeing 61.8 and 38.2 as two different numbers, see it as one level, all right? And there's going to be a tool that we're going to use, a formula that we're going to use to work out our extensions. Have you ever asked yourself, why do we have 1618 as an extension? Or 1272 as an extension? I've just given you answers of the next questions, but we're going to work it out and use mathematical rationale to be able to justify this, all right? This is why if you're in a belief system at all and they focus on numerology, the power of numbers, this is where it's coming from, because numbers are powerful. Reactions happen when certain numbers are formed and put together, all right? So what we're going to do is we're going to concentrate on a formula that you can write down. This took me hours to study, but you get this for free. We're going to do 1 divided by the retracement, and that's going to equal your extension. 1 divided by retracement equals extension, all right? This is going to make sense very, very soon, all right? So just follow me as I try and break this down. I'm going to give you one example right now, and that is 1 divided by, remember 100% is a whole number, okay? 0.618 equals, someone put that into their calculator and please give me the answer. 1 divided by 0.618. And right there, that's where you're like, okay, 1618, that's where I've heard it before, but people couldn't tell anyone why that was the case. I've just shown you using maths that 618 and 1618 are related, okay? So it's 1618. Now, let's go to its related number, which is 1 divided by 0.382. 1 divided by 0.382. It should be 2.617, and there should be another number after it. We round that 7 up to 8, and it becomes 2618. There you go. There you have it, exactly. So where you've heard, 2618 extension, that is where that comes from. Now, and we'll break this down later, if you feel like the price won't reach 2618 for whatever reason, you feel like you've drawn it wrong, guess what? You can then go back to its number that it's related to and say, instead of going to 2618, I am going to just go to 1618 from the 382 retracement. Okay? Now, we don't really want to focus on these numbers because you can use the related numbers from up here. So, going through the formula again, what is 1 divided by 0.886? And then someone else do 1 divided by 78.6. 0.786, sorry. Equals. Yep, 1.12. So you can say 1.13. That is perfectly fine. And what about the other one for 786? 1.272. So I've given you justifications and reasonings why these numbers are the way they are, okay? And obviously, if you do the equation with the 50, the answer is 2, the 200 extension. Now, based on our working out, we can now add numbers to our retracement, and we're going to form our extensions, okay? So we have the 1618, we had the 2618, okay? If you divide 1 divided by 236, I believe it will give you 423, so we can add that. Okay, we have the 1.13, we have the 2, and we have the 1272. So that forms our extension. Okay, there are other hidden ones like 141, 241, but we don't really need to worry about that. What we need to worry about is understanding why these extensions are the way they are, and where they can be placed and how we can use them. All right, so now what we're going to now understand is that most people draw their Fibonacci's from left to right. So it's like this, okay? But we don't want to do that. If you're in an uptrend, you want to make sure your extension numbers are in the direction of the trend. So if we're in an uptrend, the extension numbers should be at the top and the retracement numbers should be at the bottom. All right, it's going to take you a while to maneuver yourself around that because we're always being told left to right. Okay, but you know, we're going from right to left. Now, understanding this, we've built a foundation. I hope you've been with me thus far to understand why we have these retracement numbers, why we have these extension numbers. Now, why are they related? What are we doing with this? Now, if we are in an uptrend, okay, we are in an uptrend. Let's go to a place in the chart where it's not so cluttered. Excuse me. Okay, what's happening here? Let's use a small example. All right, so what you want to do over here is that you want to find your swing high and your swing low. When it comes to Fibonacci, all you really need to do is understand that there is a high and there is a low before there's a retracement. So we're going back to our previous lesson of impulse and correction. Now, what you want to do in this situation is that wherever the price retraces to, that is the number you want to concentrate on. And then the number that is in the extension which it's related to, that is where your end target is going to be. There's going to be two rules I'm going to ask you to remember with this, okay? So we're going from right to left, like so. When you're drawing your Fibonacci, remember that you're drawing your top to bottom from the wick to wick, okay? Your Fibonacci with this rule that I've kind of made, when drawing the 0 to 100, make sure it is from wick to wick. Wick is just a fancy word for those little sticky things hanging out of the bodies, all right? Make sure it's from wick to wick. Now, when it comes to the retracement, you are counting the body, not the wick, the body. Alrighty? You're counting the body. Let's draw that again. Retracement. And in this, you have to forget everything else you've learned about fibs to be able to understand this. Retracement, count the body. All right, so I say that. So let me go through this, and if we need to like go back and answer questions, we can. But let me just go through this and get the flow of things happening. Otherwise, we'll lose my train of thought, and that's not going to be good for anybody. All right, so based on this example that we've seen, and I'm going to make it as large as possible, we've drawn our swing high, we've drawn our swing low, we've seen that price has reversed. Type into the chat box where you think price has reversed to. Yeah, it's just like in Islam, right to left. Fib drawing part again. Okay, so when you're drawing your fibs, traditional traders will say that you need to draw it from left to right. But what I'm saying is, whatever the downtrend is, where the downtrend is where, or where the trend is facing, that is where your extension should be facing. Because we're using this as a trend continuation tool, not a trend reversal tool, okay? So I don't know where all these other numbers are coming from. We're looking at the retracement, we're looking at the corrective structure. So we've seen it going from this low to this high, okay? So what is a number that is coinciding with that retracement? Okay, where does this line end? I need at least 10. Some of y'all just being silly, or some of y'all just didn't do maths. All right, they ended at the 50. Look at this, the 50. Someone has jumped the gun by saying 200 because that is where our extension is going to be. But we want to identify first that this is the 50 point. Now, mathematically, it should serve us to say that if we scroll this down, we should get close to the 200 extension or right on the 200 extension. So let's scroll down and see where this goes. This doesn't work all the time. but I did today. All right, so look at this. Is this crazy or what? That not even the body went through there, but it just happened by the wick and it came back up. All right. Type in the YRS if you can see how the importance of numbers, understanding the retracement, its relative retracement, and the relative extension have a hand in helping you being able to see where the future could possibly go. Now I'm going to talk about TPs in a second, because obviously normally we have 3 TPs, okay? So what you want to do in this situation is that your TP1, okay, have them evenly spaced, but your TP1 normally at the 50 or any length is that you understand that TP3 is the full extension, okay? Now it's up to your discretion on where you want the other TPs to go. For me personally, whenever I'm drawing to the 200, I always hope for the 200, okay? My TP1 will be 127, then 1618 for TP2, and 200 for TP3. All right, that is what I normally use, but it's up to you. Now, look here closely to see what we've also been able to identify. You've seen in this corrective pattern, you've seen that there was a high that was established. You saw that the high got broken, and then you saw the confirmation dip that came down. So remember what we applied in our first part of the lesson, understanding the reversal pattern and the confirmation that is needed to be able to get into the market. So we understand that they reverse at the 50, but you want to be able to know that wherever I'm entering is safe enough for me to be able to enter the market. We're going to put our stop loss right above this wick, and you can see that if you had entered below this green rectangle, price would have gone down without even getting close to where this broken high was. Okay, so as it rode down, you move your stops as it goes down, but you're aiming for the 200 extension based on the 50% retracement. Okay, type in a 777 if this has changed the way you looked at charts. All right, any 777s? Oh wait, I need to scroll down. Duh. I'll do a few more examples, because this one, the Fibonacci, is a bit of a tricky thing to grasp your head around, okay? We'll go over the extension, we'll go over everything, but I want everybody to write down this equation. This equation will change your life, okay? It will be the closest thing to a Jesus experience without having a Jesus experience, all right? So remember our formula is going to be 1 divided by the retracement. That is going to equal your extension. All right? That is going to be your extension. All right? And how we draw our retracement, we don't draw them as whole numbers because we're taking away from 1. Okay? So the example that we use in this would be 1 divided by 0.50. And that's going to equal 2. And we all know that 2 equals 200% extension. That is where we are looking at. Simple math that has been broken down, and that is where your TP3 is going to be. Your TP1 and 2 is up to your discretion. But what I say is this: if price gets to 1618, what you would want to do to secure the bag is put your stop loss just above the 127. So in between the 127 and the 113. Doesn't work. It's not always the case. But if it's a downtrend, ride with the trend. Alrighty. So that is how you want to break it down. Once you get into this element of breaking it down, identifying if it's an uptrend or a downtrend, where did price go to in terms of the body? Okay, the body has to penetrate through the level, and once it does, that's the retracement level. And then you want to wait for your confirmation dip, which we went through, and then ride that trade all the way down. Now, if you had gotten into this, you would have been in the Hall of Fame for trading, because traders glorify 20 pip gains. No. 20 pip gains make me sick, all right? So we've gone from this area. Just say it's 1618. It's at the 178 level. And we rode that all the way to the 200 extension, which was the 169700 level. All right, that's close to 179, 169. So that's about 1,000 pip like gap. but we would have entered here, so we probably would have been about 850. All right, that's how we ride these long trends. Okay, making sense? I will do another example. Don't you worry. Yeah, don't worry. We'll get it. We'll get it all. And this time, you guys are gonna guide me through the trade. All right. So what I'm gonna do is I'm gonna first identify if it's an uptrend or a downtrend. I'm gonna draw the fib from high to low. Okay. We're gonna try and not get the the rest of the screen, and then we're going to identify how we're going to get there. The one thing I want to stress to you is this: whenever price retraces to 786, know it's going to 127. We know that, but know that 127 is a number of completion. Okay, 1 represents God, 2 represents union, 7 represents perfection. Okay, so once that happens, expect a reversal to happen in the market. Not all the time, no, but it does often happen. So we've seen that there has been a new low. See, there's a low here, low here. We've seen a new low, but the low was higher than this low. So we're going to assume that the trade is up. Okay, and so for the benefit of what we've been able to learn so far, we're going to go from right to left, like so, assuming that we're going to the upside. Now, can we identify where price reversed to? Put it into the chat box. We know that when you draw your fibs, you're going from wick to wick. You go into the retracement, you go from body to body. So, where are we going to? Where did it retrace to? Where did it retrace to? Look at the body closely. Let me zoom in. All right, you guys can see that? All right, now let me check this chat box. Where'd the chat box go? All right. People are saying 88.6, 61.8. The answer is 78.6. Look at this, 78.6. Price went up to the 100. It came down. It went 61.8. But the time where it was just the body was mostly 78.6. Look at this. All right? Remember, it's the body that we want to count, not the wick. Alrighty? See how it went up? It came back down. Now we're looking for an up move. So now what is the number that is related to 78.6 in terms of our extension? What is the formula? 127, exactly. So now we're going to see, remember this doesn't happen all the time, but we're going to see if this will at least go to the 127. All right, so we're going up, we're scrolling. We see some up moves, we see some down moves. And see, you don't want to be in trades like this that go forever. And this was a no-go. Why was it a no-go? What happened? What happened for it to be a no-go? I'll show you why it was a no-go. Because the trade was still down. Look at this. So I'm showing you examples that if you use this and you're going against the trend, it's not going to work out for you. We did that here. It came up all right, but then it started reversing and going down because it was part of this downward structure. So understanding your trends are very, very, very important. Now let's identify an uptrend somewhere in the market and let's see if we can do this properly. That's the present day. Let's go to the past somewhere. All right. All right, let's try this move over here. Going from down, coming back up, and let's see if we can get this extension. So we're going from not left to right, We're going from right to left, like so. Now, based on the example and based on our studies, where has price retraced to? Fifty, that is right. Why? Because the body penetrated through the 50. It could not go up any higher, so 50 was the area that we wanted to go. Now, where is the area in which we're hoping for this trend to go? What's the extension? 200, exactly. Once you know the mathematical equation, you don't even need your calculator anymore. But I use the calculator to give a mathematical justification as to why things are happening. Now, the safest thing you want to do with a 50 trade is make sure you at least get to 127, and then you kind of micromanage your trade from there. Let's see if it goes down to 200. Going down, going down, going up, going down. Going, 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 going. Look at this. Just missed, eh? And then bang. It would have taken a while, but let's count that from the 50 all the way down to the 200. Going from here. It would have taken a couple of months. But the pips on this. All right. So we're at 235 and it's at, wow, that's a lot. That is definitely a lot. What is that like? 3,200 pips. It would have taken you 3/4 of a year, but man, that would have been good, right? 3,244 pips. That's the amount. It hit our 200, and look, it just kept going. Didn't even care about technicals. It just kept going and going and going. But what you would have done is that you would have then drawn, once it got to the extension, you would have drawn a new trade to see where price would have gone to. See? Draw a new one. Where did it go to? 78.6. You would have drawn another one there at 127. So you would have been writing this all the way down, just drawing, and catching those impulse moves. You don't want to get stuck in corrective moves. It's going to be impulse all the way. Alrighty? So type in a Y or a yes if this is something you can now do confidently and say, you know what, I've never seen fibs like this, but this is something I could definitely do and put it into my repertoire. Let this chat box go. Yeah, just keep practicing and practicing. And look, I'll talk with Paris and see if I can come on in a couple of weeks just to, touch base with you guys, have any questions and whatnot. The dream of mine initially was to get into IML TV, but this is just as good. It's much more of an intimate setting, getting to know different teams around the world. So, we can definitely arrange something, but at least you guys will be able to get a hint as to how you can ride the trend, set it and forget it, and then ride all the way. Okay? Now, there's one final thing I want to teach with this geometry. It'll probably just be a teaser, and then we can continue in our next session. I think I'll give myself another 20 more minutes, and then that is it. Can you screenshot your fib levels when you? Yes, screenshot away. So let me put a nice clear area on the chart. All right, so these are the levels. I want to do another one for uptrend. Maybe that will help. All right, so when trend is down, extension faces down. Okay, this is the example over here. When trend faces down, extension faces down. When the trend is up, extension faces up. That's the first thing you need to identify when it comes to drawing this. We've learned our impulse and correction. We've learned the keys to be able to identify when the correction is over. Now you can add your Fibonacci to be able to ride the wave. All right, so I'm going to give you time to screenshot that, write notes down, and then we'll do one final thing about the power of shapes. Give myself about 10, 15 minutes, and then I'll leave you guys to do your thing for London session. All right, 30 yeses, and then we can move on. So when we do the division, we move the decimal times 2 to the left and divide by 1. Yeah, so let's do it again. The example that I'll leave with you is 1. I'll put the equation here as well. 1 divided by retracement equals extension, e.g. 1 divided by 0.618 equals 1.618. Put it in the middle there for you guys. Okay, so someone's going to ask Papa Smurf, what happens if it goes to 382? Well, you can write it to 2618, or you can be safe and say, hey, I don't want to write to 2618. I'm just going to write to 1618, and that's perfectly fine as well. Right? So that's why I laid the foundation of saying that these numbers are all related. I'm trying to get you guys to be in the frame of, okay, if it's 382, I'm just going to look at it as 618. If it's 236, I'm just going to look at it as 78.6. It will allow you guys to have higher probability trades. Okay, so that is that. So 30 yeses, if you've screenshotted it or taken notes or done whatever it is that you needed to do, I'm going to do one more thing that's going to blow your mind. And this is going to be about drawing support and resistance in a very unorthodox way, just by the simple notion of using a rectangle. What I'm going to do also is that I am going to drop a status to say that I had so much fun with you guys. If you can, show some love, all right? Your boy wants to get on IML TV. I feel like these nuggets, no one's teaching these nuggets, all right? So I had a blast with my new family. If you can drop some love on that status, maybe share something that you learned on it. If it's blessed you in any way, just so, look, I'm a guy that doesn't care about material things. I'm a sentimental person, you know? And when there are down moments and when I'm having losing trades and whatnot, I use words to really build myself up. And the Bible says that David encouraged himself in the Lord. He used words to really build himself up. So that's something for me. It might be considered a selfish thing, but you know, I'm not going to win all the time. You know what I mean? So I'm gonna need those moments. So everyone screenshotted that. I'm gonna show you a powerful thing that you can use to identify support and resistance. Remember, we haven't flip-flopped and gone into 5 different trades, 5 different time frames, and 5 different charts. We've looked at just the one chart. We've been able to break down what we want to break down. Alrighty? So thank you for the love. I see it already. So what we're going to do is we're going to identify support and resistance just by using a rectangle tool. And we're going to use trendline tools and whatnot, but we want to identify a small area where you see somewhat of a swing high or a swing low. Swing high, swing low simply means that there was a low point and there was a high point in the chart, all right? So let's go back and let's use this area, for example. You can clearly see that, excuse me, I'm so sorry. you can see that price had a low point and it had a high point. Okay, so what you're going to do, okay, is that you're going to shade this whole area. Okay, notice how it's gone from the low to the high. We'll make that transparent. Oh, wrong one, transparent. We'll make this one transparent. Boom. Blue is my favorite color, so we can make it blue. Excuse me. Now, this is something that you want to be able to master, because once you have this, it's going to change the way you look at support and resistance. They will tell you that whenever you see price and this is a key area, that's support and that's resistance. Well, excuse me, Lucy. Well, someone explained this area, and then someone explained, this area. And what about this area? Do we mean to say that all of these areas are support and resistance? That's nonsense. We're going to be writing and drawing horizontal lines all over our charts, and we're going to end up scalping instead of looking at the big picture. Now, this is what you want to do. This is what you want to do. Whenever you've identified the high and the low, you've identified the rectangle, you want to get your trend line, and you want to go from corner to corner. In Ghana, we have a song called One Corner. So just remember that. Go from corner to corner. Make sure you're covering both ends, okay? Now, what you want to do is that you want to go from the other corner to the other corner, like so. And you want to mark the spot of X. And how do you mark X? Simply get your horizontal line tool. Remember, we have not used any indicators. This is all lines. This is all from what we see. Understanding and leveraging the fact that, one, we are the highest created beings that God has ever created. And two, he has given us the mind to be able to see mysteries and wonders that have been concealed for a long time. So we're going to put the horizontal line right in the middle of X. Notice something here. Notice that when we drew that, you see significant reactions off this line. Yeah? And so we're going to understand the bigger picture. We're going to draw a horizontal line over here. Make that blue. And another horizontal line down at the bottom over here. Okay? Now, when you have your horizontal lines at the top and at the bottom of your rectangle, you're going to call them major support, okay? Major support and resistance. And then when it gets to the middle area, you're going to label them minor levels of support and resistance. And it's just going to help you identify what is what. Okay, you only have to draw this box one time, find a decent swing, and then work with it. Okay, now what you're going to then do is that you're going to use your trend line tool like so, and you're going to measure the distance between your major support and resistance and your minor support and resistance, like so. Bam. All right. People are like, what is he trying to do? It's all right. You'll understand. Then you're going to do another one, going from major support and to major resistance, like so. All right. This is what's going to happen. Remember, in the very, very beginning of this call, I said, whatever happens once will surely happen again. You're going to get this line, you're going to copy it, and you're going to put it at the top of your major resistance, like so. All right. Doesn't have to be exact. You can, be okay with it. Then you're going to get your line and put it on top of your major resistance. Now you've created minor support, resistance, and another major resistance area, like so. So you can then get your horizontal line tool, put it at the top of this area. Blue is your major support and resistance, and then red is your minor, okay? And we're going to do this about 3 or 4 levels up, okay? So we're going to our major resistance, boom. Major resistance, boom, all right? Copy, bang, and then copy. All right, now when you've zoomed out, you're gonna see significant reactions. It doesn't have to be on this line, but around these areas, that's where you find dramatic reversals, dramatic pullbacks. All right, so if we zoom out, we can remove now this, oops, and this, and these little lines, and now you can see that you've created little markers for yourself to be able to understand where price could potentially go. All right. So, excuse me. You can see that at the bottom of this major support, you can see there was a significant reaction. It came up and it tested a minor reaction. And then it went to the opposite, major reaction. It tested the major reaction again before coming down. See how it broke through the minor area, came back to retest that area, and then came back down to try and test this major level, but it couldn't because it was so strong. Came up to test the minor area, back down, test the minor area, back down. Then it floated with the minor area before going up to a major area. Yeah, then to the minor area. See how it bounced off the minor area before coming back down to a major area. Major, minor, major, minor. And you can see every time that there was a halt or a major reaction, it happened off of one of these areas. Look, let's follow the chart. You can see major reactions happen at these areas. So looking at GN now, you can see that it's got a little bit ways to go before there's a dramatic reaction, either back to the upside at a minor key level, or we're going down to the next minor key level. And what you've now done is that you've created now a safeguard to be able to say, when price gets this area, I need to take action. All right? That was just a sample. That was just to tease you, so you miss me, and then you demand to have me back. All right? So I just want to thank you guys for your time. I want to thank you for having me. You guys have been phenomenal. You're a funny group. I love you. I love that you guys have a family vibe, and I want to see everybody succeed. I want to see everyone excel. I want to see everyone not just rely on swipes. Okay, we're here to confirm what you guys are already seeing. You don't have to rely on us to eat. It will be good, and if you do eat, make sure you share that up with Smurf. But in saying that, you don't need swipe trades to become a successful trader. You guys can do all of this yourself. All right. And so I hope that everything that you've been able to learn in these hour or 2 hours, I don't know how long it's been, you can put it to great use and teach others to fish. You have a team, you have prospects, make sure they get that footing in that education so that they can bless others as well. We all want to grow, we all want to be chairman, but I don't want marketers taking over this game. I want traders being able to get the ranks that they deserve, all right? So thank you so much. I'm going to hand it back to Paris. I didn't record this, so if it wasn't recorded, my bad. You know, this can just go into memory. But if you guys want to see something like this again, all right, maybe let's do a petition like Papa Smurf for IMLTV 2020 or something like that. You know, I've been telling them they need me. You know what I'm saying? Anyway, it's all good. I love you guys so much. Paris, back over to you, man. Paris. Paris. Okay, well, yeah, I think so. You know, like some will sleep on the information, and sleeping on the information is good. I'm gonna be in your subconscious, like Papa Smurf for IMLTV 2020. You know what I mean? Like that's gonna be in your subconscious. So maybe I can just end the meeting, show some love on the status. Let's stay connected. You know what I mean? Stay smurfing, and let's get it. God bless you. Love you guys.